Good morning. I'm delighted to welcome today Jennifer Calvary at HSBC, who is the Group Head of Financial Crime at the bank. Jen, thank you so much for taking time out of your busy schedule to be with us this morning.
Thank you. We're glad to be a part of it.
So Jen, we got engaged as sort of partners, sort of at the height of the DPA, the Deferred Prosecution Agreement that you had with the US regulators, and obviously one key part to that whole sort of journey we've had with yourself is around the data, the analytics, and how we operationalize that across the bank. Before we sort of go through some of the journey, could you just get a bit of context on the journey and where you were when we engaged and sort of that sort of backdrop before we talk about some of the great work we've done?
Back in 2012, and that's before you and I met, but back in 2012, HSBC signed a deferred prosecution agreement with the US Department of Justice. And basically, we acknowledged that we had failed to put in place effective anti-money laundering systems and controls, sanctions systems and controls, and we had a long way. So after that point, we went about busily remediating, really starting from ground zero, putting in place policies, procedures, systems, controls, and trying to bring ourselves up to where we should be, where our regulators wanted us. And I would say through that journey, we started to recognize perhaps how this could be done better. That technology and data, the idea of using big data, the idea of using technology, more advanced forms of analytic techniques were becoming more and more prevalent through that period. So by the time you and I met in 2016, early 2017, we had really kind of grown in terms of our confidence in terms of being able to understand and manage financial crime, or at least knowing what it is we wanted to achieve and how we might start getting there. And we really wanted to use what we saw as our core business strengths, the fact that we're in 60 plus countries and have a network of banks all across the globe, the fact that we have vast amounts of data, our customers' data at our disposal, as well as the entities that they transact with, all that data we have at our disposal, we started to see less as a complexity, less as a hurdle, and more as an advantage in terms of being able to identify financial crime early and be able to mitigate it and protect our bank from being exploited by criminals. So our vision really changed from that period. We changed as we grew in confidence, as we grew in knowledge. And I think our ambition changed from one of wanting to make sure that we met regulatory requirements to one of wanting to be leaders in the industry and being the best out there in terms of managing financial crime.
I remember, I'm going to say a few years, it feels like, years ago, but it's probably only about 3 or 4 years ago, where one thing you said to us, and you actually brought it in another presentation, is knowing your customer. Who is that customer? I think you once used an example of a florist in London versus an oil company in the UAE. Just simply understanding that customer and that context then allows you to understand if it's acting in the way it should be versus acting in a different, maybe suspicious way. And I think you took it down to the basics, right? Of first things first, let's get the data, which you talked about bringing that together. But the next part is just purely understanding that entity, understanding that customer. And I think that's where sometimes people get it wrong, right? They tackle the problem, pure machine learning, go to the transactions, do it, and then suddenly that's going to be the golden bullet. But I think what your sort of process has been is getting that data first, but also then understanding your customer was a key part. Do you want to just share a bit more around that, how you did that and how you built that sort of view?
Yeah, I think first just taking it back to first principles. When I first joined the bank back in 2016, this was my first job in the banking industry. My background is as a criminal prosecutor and then a regulator and head of the U.S. Financial Intelligence Unit. And in those years, in all those years of looking after and trying to detect and understand what criminals were up to be able to prove that in court and be able to successfully prosecute individuals in court, never were we looking at it from the standpoint of, here's a suspicious transaction. Now let me see if I can find a criminal. Like, you're always looking at a person. It's people who commit crimes and people who work at organizations and those organizations that they use to commit crimes. And so I was a bit stunned in many respects coming into the financial industry to see the focus being entirely on, let's start with a transaction and that's where we'll find criminal activity. Whereas in my mind, in the mind of, and it wasn't just me, many of my colleagues, my boss, we were all kind of the same view of, look, you got to start with an individual or with a legal entity and look at its behavior, look at it in context, look at how that individual interacts with other individuals and who those are and who those individuals are, and really get a contextual view of an individual to understand if they're potentially exploiting our services to engage in financial crime. And so we kind of quickly started to say, all right, well, how would we, if we were going to start from zero, forget the systems and processes that are in the industry today and have been built today, if we were going to start over and build something, what would we build? Yeah. And I think that's where we started. And we decided we wanted to focus on kind of individuals and entities, legal entities, companies, corporations, et cetera, to be able to understand in context what's their behavior and do we think it presents a high risk of financial crime to HSBC today? So on any given day, can we say, does this customer, does this pseudo customer, do they present a high risk of financial crime to HSBC today? And if so, what do we need to do about it? And that's what we've gone about trying to build.
Absolutely spot on. And, you know, again, you know, through our discussions and also, you know, with some of your peers, the transactions and the payments is where sometimes the behavior lies of suspicious behavior. And you can see that through it, but without context to the customer and who that customer is, you're almost trying to make a decision based upon half of the information and thus half of the lie. And the other thing, again, you've taught me personally, as well as, you know, in our organization, is if you look at the context of both the static data on the company information and combine that with the behavioral, that's when you bring it all together, right? And when I say static, I'm looking internal to HSBC data, but also external data, and it's combining all of that.
That's right. That's right. I don't want to suggest that transactional behavior is not important, because it's an essential part of what we're doing. For sure. It's one piece of behavior, though. And so just looking at an individual transaction without that broader context, is this a flower shop? Is this normal for flower shops in this location? Without being able to put that broader context around it, just starting it with a transaction, a single piece of behavior on a single instance, makes it quite difficult to understand what your risk is.
No, you're absolutely spot on. And I think, again, just reflecting back, right, you know, outside of technology and the data and the analytics, I think one thing the group has done, led by yourself, is the relationship you have built with regulators through this journey. And you've gone about it in a way which I think has been quite envious, right, to some, on how you've gone and created this capability, but have also taken people on this journey. Obviously, you mentioned your background, and obviously that is hugely valuable. Do you want to share just as much as you can and comfortable on some of that aspects around not just being a tech and data problem, but also a policy, but also taking people on this journey with you?
So I looked at coming to HSBC as a real learning opportunity for myself, but also a chance as we were going on a journey and really started to see what we believe will be a more effective way of identifying financial crime, a good overall for the system, enabling us to do better reporting, enabling us to not only protect our bank, but the communities in which we were located. As we're going on that journey, I think our approach was from the very beginning, well, let's talk to the other regulators out there about what we're doing, and we can learn together, and we can tell them what our challenges are. And so in those early days, I think we started with looking at transaction monitoring in particular and pointing out that a rules-based approach to trying to identify financial crime in the flow of financial transactions, we didn't think was effective. And the reason we didn't think it was effective is because the entire industry had been doing it for a number of years, and we've never really gotten above single-digit positive rates, or false positive rates rather, in the high 90s. And so it means that we spend a lot of either human time closing out false positives, closing out the noise, or having to create other systems to close out the noise after you generate the noise. It just seemed incredibly inefficient and not particularly good at finding the most serious financial crime, because at the same time we were creating, at one point a colleague of mine called it the Ocean's 11 of financial crime investigative talent. So we had recruited in what we believe were some of the most talented people out there across the globe at identifying financial crime. And we told them to just, see what they could find that had managed to get past our controls. And they tended to find the higher risk type activity facing the bank, and it didn't rarely, if ever, was it found by transaction monitoring, or when it was, it found one transaction and we didn't see the bigger picture, and we didn't really know what it was, because it required looking again at that context and the network and the more wholesome view to really understand what we had before us. So I think as we went on that path, we started to, kind of share some of that with regulators. We started working with them on public-private partnership between industry and the public sector, because we felt that if we started working on some of these problems together, we would go on that learning journey together. So I think that was a key piece for us early on, was really just a partner in going after, one single crime at a time, but doing it in concert with law enforcement, so they could see how we worked, so they could see the tools we were using, and we could have a conversation on how it could become better.
No, and you're spot on. And I mean, one thing I remember through this journey, and again, we've kind of looked at this sort of together, is combining both human intelligence with machine intelligence. And it's bringing that together. So some of the, your Ocean's 11 that you've recruited have experience around dealing with these matters in a complex investigation type of way, and trying to sort of harvest that back into any form of technology is fantastic, yeah? But then there is stuff that the machine can do at scale, at volume, that simply the human brain cannot do. And it's how do you combine both? Is the best of the anomalies that the machine will find at the volume, but also the 25 years experience of a human at dealing at such matters equips us with the best arsenal to attack this problem. And again, I think that's the partnership as well within the team, but also with law enforcement and so on.
Fish, when I think about that, actually, a couple things come to mind. First, just let me give a context of the scale we're dealing with. So we're looking at over 650 million, I think, transactions it is a month for financial crime. So that's the scale. On an annual basis, that's roughly 250,000 investigations that get all the way up to the level 3 investigators to determine if there's suspicious activity out of those transactions. So 250,000 transactions. My Ocean's 11 team, by contrast, they don't do those 250,000 investigations. They do the more detailed, longer, proactive type work, and they do about 150 investigations a year. So I can't hire enough Ocean's 11 investigators to manage that scale that I need to be able to understand the risk in there. So the question has always been, how do you take the skill set of those 150 investigators, or the investigators doing the 150 cases a year, and how do you build that into a technology that will enable you to detect and better understand what you're seeing? So we're trying to close that gap as much as possible, and I think we've done a couple things. We've used some of the Quantexa technology has aided the Ocean's 11. They use that to aid their investigations, but then we've tried to think, how can we embed that into our industrial scale processes? How can we embed some of those technology principles so that we're looking across all of our transactions, all of our customers, and everyone they interact with at all times every day? That's the scale of the challenge, and it's no small challenge.
So Jen, as we've gone through sort of this journey over the last few years, the bank, and again, under your leadership, has invested a substantial amount on data analytics, on the people side, the process, but you've also invested in cloud as well. I mean, your partnership, our partnership with Google over the last few years has been, pretty innovative in one way, but also magnificently effective in another way. Can you share a bit about sort of that partnership we've been on over the last few years?
Yes, so I think it didn't take us too long to realize that trying to take our Ocean's 11 team and scale that across the bank using technology and analytics was going to take a lot of processing power. And we had an episode actually fairly early on where we tried to use some of our new techniques just in our across our UK customer set, and we managed to kind of crash all of the bank's systems. I used to joke with some of the CEOs, do you remember the day the lights went out across HSBC? That was us trying to use our internal reserves of processing power to carry out some of these activities. And so we realized we were going to need to move to the cloud and be able to use the vast processing power that affords us, both at any given moment, and it's quite frankly much more cost effective, because we need a lot of processing power at one moment and none the next. And we didn't want to have to pay for the maximum processing power we might need at any moment. We kind of, you want to pay for what you use. So there's kind of a business case behind using the cloud, and there's just an operational challenge that requires that level of processing power as well.
No, spot on. And, if we look at the cloud and specifically the work we're doing together with Google, I think the benefit analysis around the spike of behavior and the processing is a given, right? And that is a business case in its own right. I sometimes hear in the market a bit of confusion when it comes down to the cloud. It's like, that's the answer to everything. And it's a place, as you say, that can bring you the benefits on cost and so on. But it's only as good as the data you put in it. It's only as good as the analytics and the technology that you run across it. And then is how do you operationalize it? And sometimes people forget that. So, okay, I'm going on a hybrid cloud journey or a single source cloud journey. We've got the answer. No, you're just moving the data then, and obviously that's a huge tick and there's a huge benefit. But I think the way we've capitalized that and applied our collective thoughts and capabilities in the cloud has now shown some benefit. I mean, again, without talking the actual specific on the numbers, but some of those benefits, even if you look in the UK area within HSBC, can you share some of your experience around that?
Yeah, I think what we've seen is as we were trying to develop, our analytic capabilities and then test them out on our data, it would take us a day, 2 days, a week to get the results back of any new, analytic test that we had created, any new code we created. It would take us a long time to get those results back. When we moved to the cloud, we would get the results, so much more quickly. It feels like near instantaneous. I know it's not quite instantaneous, the team will tell me, but it feels like it compared to what we used to have. It feels like the difference between, for those of you who are old enough to remember the old dial-up modem to get onto your email, which, you waited forever, and then all the way now to 5G, right? So, and with each new level between dial-up modem and 5G, just think, how much faster you've been able to use your phone or whatever technology you're using at the time. It's that same kind of difference between going from our own internal capabilities and how quickly those could process and enable us to test and turn around and improve our analytics, because you have to test that stuff over and over and over again and kind of, almost fail your way to success by testing all kinds of different hypotheses. So the more you can test, the faster you can do it, the better results you can get. And that's what we've seen from working on the cloud, is just our ability to get from idea to something that's effective that we might then want to deploy. It takes that journey down and just makes us so much faster.
I totally agree. I mean, again, the feedback I've heard and seen and witnessed, the agility that you're doing and the speed of that agility allows you to pivot and innovate as well at a rate. So that's, it's been tremendous. And just looking sort of with regards to sort of the future in our space, and what do you see as some of the trends around the future of detection within financial crime, the collaboration between the private sector and the public sector, things around data and analytics and tech? Where do you see some of the future in those areas?
So I think there's a few different things. First of all, network analytics is really big, and everybody's trying to figure out how to maximize the use of being able to see a network and use that as a means of detecting financial crime. It's one of those things that just intuitively makes sense to me as an old style criminal prosecutor. We used to draw networks out on a piece of paper, and then, technology advanced from there to where it is today. But since the beginning of time, I think understanding criminals and their operations has been understanding their networks. I started out in organized crime. I started out with the more senior prosecutors who had gone after the Italian-American mafia, and that was all about being able to draw out, who was the capo, who was the different members of soldiers within an organization, what was that network, and how did they interact with other criminal networks. So I feel like since the beginning of time, it's been, how do you understand a network? So network analytics is key in this space. Also key in this space is, I think, going to be, as we've talked about, it's the cloud. It's looking at using techniques, machine learning techniques, both supervised and unsupervised. And I think that's really important, that we have a combination of those two. Using the supervised learning techniques enables us to take known instances of criminal activity and say, find other things that look like this. Because we know that criminals tend to copy one another and commit the same types of activities. So that's incredibly important. Find other things that look like this, use supervised learning, and then using unsupervised learning to help us find things that we don't already know about. So here's 100 flower shops. Which one looks unusual? That's what we can do using our unsupervised learning type techniques. And so that helps us to kind of find the next thing. And combining those and using machine learning to enable us to continuously learn as we go through these processes, I think is where we're going. Being able to dynamically understand the risk that a customer presents to us on any given day and to score that risk, I think is where the industry is going and should go. I really want to see us moving in the direction of using these technologies to become more effective at identifying financial crime, and not just using them to eliminate noise on techniques that we've proven don't work, like a rules-based approach to transaction monitoring. I think it would be a real waste if all we did was simply make that technique more efficient. I'd like us to see a paradigm shift where we actually increase effectiveness overall.
What one would argue, Jen, that in that latter example, that you're making a poor process or poor technology more efficient, which is not what we're here to do, right? And just finally, as we sort of conclude for today, obviously we're going through a massive global pandemic. Business processes, business itself on the front line has changed. It's become more digital. Some of this may remain very digital going forward. What we've seen in the last 12 months with the pandemic and what we see going forward, how, if anything, is this going to change financial crime? And how does this change potentially our response to financial crime?
Yeah, so I think our ability to look to adapt and respond to changes in the world around us, particularly the immediate and longer term impact of COVID-19. And I would add maybe one other thing to that, and that's the increasingly fractured geopolitical landscape. There are two fundamental things that were really the financial crime challenge, at least for us in 2020, and we think it will remain so in 2021. So when I think about COVID-19, I guess what we've seen are criminals, first of all, repurposing their existing cyber-enabled fraud typology. So the bread and butter cyber fraud that they were doing every day, it's kept up. It's just they've changed their hook to target customers based on some kind of COVID-19 related hook. So, talking about COVID-19 is good clickbait. So if you're trying to get your victims to click on something, it's a way to reel them in. And we've seen that. So we haven't necessarily seen our overall fraud go up. Instead, we've seen how they're doing it, change and be kind of COVID focused. At the same time, though, we've seen increasing regulatory scrutiny on personal protective equipment procurement. And I think we've likewise been focused on that, as well as criminal exploiting government relief schemes. And I think that's an issue that we'll see intensify as the payment holidays start to expire. And then finally now, and vaccines are such a wonderful global story, but as they're developed and rolled out, we also unfortunately expect to see similar challenges in terms of creating kind of the conditions for bribery, corruption, and fraud across our markets, now focused on vaccines, whether that's as a hook, whether that's, again, in some type of a procurement scheme, bribery, et cetera. And then finally, as you alluded to, we've seen a change in consumer spending activity, and we expect that that'll remain. And so in the short term, that gives us some challenges around our systems that were programmed for consumers and companies transacting in one expected way. Now their behavior has changed, and so we need to update, what looks unusual to ourselves. And I think the other kind of longer term impact coming out of that is that it's just accelerated that broader trend towards digitization and e-commerce. So that we're now looking at the new payment channels, often with overlapping business models. And it gives us at banks challenges in identifying illicit behavior. So now we're trying to look, we have limited visibility of transactions end to end when we have a third-party payment processor involved or a virtual currency exchanger involved. So how are we going to manage that maybe in the correspondent banking And in the longer term, the emerging use of kind of blockchain solutions and trade finance and tokenization, it's going to change the threat landscape. So one of the things that is a truism about financial crime is that the criminals are constantly innovating, but so too is the financial sector. And when you put both of those together, it creates for a dynamic play space for those of us in the compliance business.
Thank you, Jen. And look, I just wanted to summarize and again, thank you for your time this morning. You've been a tremendous partner to the Quantexa family. We thank you again for your trust that you've given to us, and thank you again for your time this morning. I know how incredibly busy you are. And the final point, I just want to again thank you for all your hard work you've done for our society as well. So keep up the great fight. We look forward to working with you, obviously, in the future. And thanks again for your time today.
Thanks, Vish. It's a real pleasure.